smaller than usual group today. Half a dozen or maybe up to 10 people in this session, which is fantastic. I think that when we've got an intimate group this size, very often the fall sessions, the larger session, group of people. But when we've got a group this size, it gives us an opportunity for you to bust in and ask specific questions and ask questions that might be more relevant to your business. Of course, the CPC is pretty generic. We've got people from all across Canada involved in the group. So the examples that I give sometimes are going to be for a particular province or a region, but but if you've got specific questions you'd like to ask me, that would be fantastic. Um, I'm going to click in a couple seconds and take myself off the screen. But a couple things for today. One is that we're on till 4 o'clock today. So at around 2:30, we're going to take a 10-minute break. At that point in time, I'll not turn off anything. I'm going to ask you not to leave the room. Sometimes if you leave the room, that means I have to let you back in the room. And Jennifer is the administrator of the group. So when we go to take our break at 1:30, please just freeze your microphone or your camera, and let's go off and fill your coffee cup up, and come back after that 10 minutes. We're going to do our absolute best to finish on time, and tomorrow we're going to skip over some of the things that are kind of generic accessy type things because we're going to have pretty much the same group tomorrow. So I'm going to try to get us finished about 10 minutes early tomorrow. Um, so look forward to yay, start on time, finish on time. Um, Also, if you have a question and or it's very possible I could say something confusing or wrong. Sometimes I get my words mixed up and say things wrong. I think I'm saying one thing and I'm saying something else. That happens to us when we talk for 3 hours straight. Um, Please, just instead of typing a message in the corner of the screen, which usually requires somebody to monitor, just take your microphone off of mute. Click on that little red thing on your microphone, take it off mute, and go, "Hey, Steve, it's me, Emily, or it's me, Kevin, or Jocelyn." Just jump in there. Can I ask you a quick question? And please do that because it lets me know that you're listening. And I love kind of turning some of the stuff into a more interactive session, which, by the way, it's not going to be. When we do these things live and we've got people in the room, it's really easy for me to ask questions and do polls and engage conversation. Online, that's when you got a lot of content to cover, that's pretty hard to do. So I rely on you to stop me and ask me questions along the way. If you've asked a really great question, but it's going to be covered in a slide coming up, I'll let you know that. And don't be embarrassed to ask the question anyways. Don't wait too long. And then, of course, when we come back after our break, we'll have a chance to kind of review a couple things if you've got questions there. So I'm going to figure out how to click on some buttons here and share a screen and put this presentation into presentation mode in a sec. All right, so somebody want to demute themselves and just verify me, Kevin? You want to let me know if you can see that screen, or are we good to go? Can anybody
I see the
demute?
screen.
Perfect. Okay, that's fantastic. Okay, guys, so if by any chance, again, I want to call upon you for your assistance. If by any chance you think that my speaking is not matching the slides, again, we don't have a office monitor on for today, then just say, "Hey, Steve, I don't think that this is in sync," and it could very well be that my screen is frozen on your end or something, and we'll try to get things corrected. So jump in any point in time. Okay, so first off, a little bit about ACSESS and the CPC. So first off, the Association of Canadian Search Employment and Staffing Services is the only organization in Canada, industry association in Canada, representing the interests of the staffing industry. There's a few consultants and a couple people out there that provide services to the industry, but we are the ACSESS. We are the only industry association representing the interests of ACSESS. Many, many years ago, oh golly, 30 years ago, there were two industry associations in Canada, one representing three, one representing the um, uh, recruitment side of the industry, the Association of Placement Professionals and Consultants, APAC it was called. And there was the Federation of Temporary Help Services representing staffing services. And then there's another organization representing very narrow interest group of computer consultants and professional consultants. Now all the industry associations are all merged together under ACSESS. There is only one. And part of the ACSESS's mandate is to provide professional training and certification to consultants working on the desk. When your company is a member, so companies join ACSESS, not individuals. When your company is a member of ACSESS, you automatically are a participant from a member company. So you are, in essence, a representative of your company as a member. Every employee of your company is a representative of ACSESS as a member. The CPC certification is for you as an individual. And if you change companies and move to another ACSESS member company or to a non-ACSESS member company, you still retain your CPC certification. There's some changes coming up in the certification effective starting this year or next year. I think it's this year, where over the course of a 2-year period, you will be required to take some professional development things offered by ACSESS. You get some points to keep your CPC active. So in other words, it's not a set it and forget it. You don't do your CPC and then 20 years later still say I'm a certified personnel consultant. You need to do some professional development things that will be offered through your local chapters and through national conference and through online things like this. It won't be rigorous or onerous. Some of it will be free, some of it will be very inexpensive, but it's all intended for us to be able to say, as an industry association, those members and people with the letters CPC behind their name are up to date on all of the issues that are affecting us, particularly the legal issues, health and safety issues that exist in Canada. This is a representative of your commitment to your professionalism. And your ACSESS, the company you work for as an ACSESS member, has made a commitment as part of their membership to uphold the ACSESS Code of Ethics and Standards. And so in a future session, when we talk about business practices and ethics, we're going to go through all of the whole variety of business practices in the staffing industry to be for best practices and ethical business practices and the ACSESS Code of Ethics and Standards. So you work for a company that's made a commitment to the Code of Ethics and Standards for the only industry association in Canada, and you, as a member and an employee of that company, are now taking the next step to prove your professionalism and commitment to the industry. There are currently 6 modules. I think if I click one more, maybe it doesn't come up. I'm not really sure. Let's see. Okay, what's going on? Okay, so there are currently 6 modules that exist. One of them should be showing up over here. I apologize. That is a new sales, professional recruitment industry sales module that is optional. So through the 5 modules that are required to write your CPC exam, you have the option of taking recruitment or sales. And the sales sessions were just rolled out last year for the first time. And so this is the second full time that individuals pursuing their CPC have got the opportunity to pursue recruitment or sales. And of course, I recommend that you do both, that you do the recruitment and sales. It's a small extra cost, but they're both very important parts of our roles and everyone's role in the industry. When you've completed the 5 sessions or 6 sessions, in order to qualify for a challenge exam. The challenge exam will be offered in the fall and or at the end of this spring session, and then again at the end of the fall session. It is done online. It's a multiple guess exam. And also there will be everything that we cover on this exam, on these courses, nothing outside of the content of these sessions will be on the exam. So you can get it all from participating in these sessions and or re-listening to these sessions. And to set your mind at ease, there's going to be some very specific things about different provinces. For example, minimum wage. Minimum wage in every province is different. You're not going to be required to memorize what the minimum wage is in any particular province. There's going to be rules about how you calculate things like vacation pay or public holiday pay. You're not going to be required to memorize those. You're going to be required to understand the concepts of those, that they exist, who is responsible for them, what they're intended to cover, but you're not going to be required to memorize all of the little details. And really, that's an important part of this, because these things change. They change all the time. So it's important that you know that they exist. And when an issue comes up, that you say, hey, I think there's a law about that, or there's some regulations about that, or there's some best practices about that. And you have the opportunity to go and take a look and remind yourself for the province that you're in and what the best practices are. And so these member companies that have, your companies that have joined ACSESS, have made a commitment to the Code of Ethics and Standards, as I've mentioned already. And today we're going to be talking a little bit about employment standards legislation. We're going to be looking at things like definitions of an employee versus an independent contractor. We're going to look at some special issues that exist for temporary help agencies and for contractors. We'll look at some case studies. We're going to talk about how these apply for licensing within our industries. And of course, the whole point of this is for us to make a commitment to uphold the standards and legal legislations that exist for our industry. So first off, the Employment Standards Act. If we were in the room together, we'd have a show of hands and probably have a discussion about you rating yourself in terms of what you think you know about employment standards. And I'll be honest with you, most people know of employment standards. They don't know the details. They don't know what they're supposed to cover, but they've had some issue at some point in time with some aspect of employment standards. So they know that this legislation exists. And today we're going to drill down and talk about some of the things that exist in the legislation. So first off, let's talk a little bit about law so that we can put this employment standards legislation into context. So beginning at the top, we've got the Charter of Rights and Freedoms and the Canadian Constitution. So this is what, as a layman, this is not a law class. As a layman, I call it the law of laws. It's the overarching rules that are set in our Constitution that says which level of government is responsible for certain things. So, for example, it tells us that education is a provincial responsibility and healthcare is a provincial responsibility and national defense is a federal responsibility, and that crimes that are capital crimes with over 5 years of jail time is a federal law, and crimes that have got less than 5 years worth of jail time are a provincial law. So the Constitution tells us who is responsible for what and gives us some guidelines about how those rules should be made. And so very often you say, oh, we took that to the Supreme Court of Canada. We appealed that law, or we appealed that decision to the Supreme Court of Canada. And what they're doing is they're saying a decision was made somewhere down here in statute law, in the application of a policy, or in the creation of, or the application of a law that was created in Parliament or in a legislature, and people are challenging it that it wasn't created properly or being applied properly according to the law of laws, our Constitution. And of course, the Charter of Rights and Freedoms is part of that constitutional law for us in Canada. And so we very often hear that there's a charter challenge when we talk about that. The next set of laws are statutes. And statutes are the laws where our politicians get together and they vote, they propose new laws in their legislature or in the House of Commons or in municipal law in cities, um, our city councilors. They propose laws and they vote on those, and the majority in those places will create a law. So pretty much all the law, when we talk about laws, when we regular folk talk about laws, we talk about the laws that were passed somewhere by elected politicians that became into statute or came into law. And then there's this thing called common law. And so very often you hear the expression common law. Someone's in a common law marriage. So what happens is that in the courts, the judges make decisions, and based upon all of the facts and circumstances that they made decisions in the past, they say, okay, so this is the way that we're going to apply the law in the future. You don't want to have one judge saying that's a strike and another one saying that's a ball. You don't want another one saying in this circumstance that's a fair ball and that's a foul ball. You want to have a set of rules. And so what happens in common law is the decisions that were made in the past using the judges using the Constitution and the Charter of Rights and Freedoms and the application of statute law and the application of common known regular practices. They make decisions, and then the pattern of those decisions become in common to us all, and this is what we call common law. So they basically, for example, when we use the word common law marriage, originally it was, I think, if two people live together for 5 years or longer, say, for example, in the province of Ontario, and they acted like they were married and they did all the things like they were married, then you could say, for all intents and purposes, any laws that exist for married couples now apply to these people because they've got the concept of marriage in common with the people who have a certificate of marriage. And so we talk about common law marriage. Well, that exact same principle exists in all kinds of other decisions about terminations of employment and about, and also these common laws, decisions very often influence the government to say, okay, now that those decisions have been made by the courts and they've become common law, let's codify it. Otherwise, let's write a code or a piece of legislation or a law that writes it into law so that now it's not just common law, but it's also statute law. And I'll give you some examples of that. And then we have contract law. And for all intents and purposes in this discussion today, the most often time we're going to talk about contract law are in employment contracts. And under the business practices and ethics, we're going to talk about customer contracts, purchasing contracts, terms of service contracts. And so a contract that was written between two parties that follows all the normal rules of a contract, and we're not going to get into all the rules of a contract, but when a contract is legitimately executed, then that becomes a law, basically a law between the two parties. And so there's laws that there's kind of like common laws or contract law that says here's how we follow the rules of contracts, everything from getting paid and providing good quality service and so on. So we've got contract law for all intents and purposes today. That will probably most often be applied to employment contracts. We've got common law. Those are decisions that are made by the courts and the judges that become common to all of us. We've got statute law, which are those laws that are made by legislatures, the House of Commons, and by our elected politicians that write those laws into force. And then we've got constitutional law, which is the law of laws. It's the one that gives us all the guidelines about how laws are supposed to be written designed, implemented, who has responsibility and authority to make those laws. So there we go. That is our. So as part of the Constitution, we have got uh, the various responsibilities first broken down into whether or not it's a federal responsibility or whether it's a provincial responsibility. So, for example, the industries listed on the right-hand side of the screen, banks, marine and shipping and ferry, where there's access to an ocean, or so anything that goes along the St. Lawrence Seaway out to the ocean, the Great Lakes out to the ocean. These are all federal shipping and ferry lanes. Air transportation, airplanes, they cross across provincial borders. We don't have different rules for airlines in British Columbia than we have in Nova Scotia. You want to know that the same safety standards and rules that when you take off are the same when you land, depending on where you're going. We've got interprovincial railways covering provinces, canals and pipelines covering various provinces, crossing over provincial borders. Telephone companies, again, same thing, crossing over provincial borders. Cable, radio, grain elevators and feed. Certain types of feed are federally regulated, and seed mills. That's because we want to have standards for our food because most of the grain is going to be grown in say, for example, in Saskatchewan and eaten in Quebec. We want to make sure that the same standards exist. There are things like uranium mining, safety reasons. We want federal standards for that. Fisheries, oceans, First Nations issues. There are federal crown corporations, businesses like the CBC or prisons. These are often operate under crown corporations. So these are separate, let's call them businesses or entities that can operate a little bit outside of the political sphere, like outside of a ministry or a department, but they're still regulated by and controlled by the federal government. And then private businesses that their only and sole purpose is to support one of these federally regulated things. Now, this looks like a long list, but when you think about it, someone's got to be admitted back into the room. So when you think about it, although this looks like it's a long list, it's not that long because pretty much every other industry in Canada, retail industries and manufacturing industries and automotive industries and staffing and recruitment industries and law firms and medical issue, you name it, food, these are, restaurants, these are amusement parks, these are all provincially regulated. So very often you'll see things like, for example, the your kids will be going to school, you're going to work, let's say, for example, let's take Ontario and Remembrance Day. Now, that's an interesting thing because Remembrance Day is actually a statutory provincial holiday in some provinces. I think Alberta, for example, is a provincial holiday. And in Ontario, it's not a provincial holiday, but for the federal government and for all the federally regulated industries, it is a holiday. So if you're a bank, you're closed on Remembrance Day. And so this is why we often refer to it as a bank holiday. Oh, today's a bank holiday. The banks are closed today. Well, it's not some kind of thing about banks, really, why it's closed. It's the federal government and everything that falls under the rules of the federal government are closed because the federal government can only regulate holidays for federally regulated industries. And then each province creates for every other business the provincially regulated industries for their province. So this is why we've got, say, for example, Saint Jean Baptiste Day is a holiday in the province of Quebec, and Victoria Day is a holiday in Ontario, but not crossed over because each province has got their jurisdiction to make that kind of decision for provincially regulated industries. And so The same thing goes with respect to employment laws. We've got the Canada Labor Code, which is the law, like the Employment Standards Act in your province. It's the federal law that says what the minimum wage is going to be and how when overtime kicks in for all of the federal government employees and for all of the industries that are regulated by the federal government. And then the provincial governments each have their own Employment Standards Act, which let me just make sure I get this. Will have their own Employment Standards Act, which will cover the provincially regulated industries in their province. So we staffing companies, recruitment companies, permanent placement companies, executive search companies, contract labor companies, IT recruitment companies, temporary staffing companies, whatever you want to call yourself, companies, human resources consulting companies, whatever we are all provincially regulated, not federally regulated. And there's only one instance that I can think of where a federal law finds its one that a federal law finds its way into provincially regulated companies. So even if you're supplying your temps or your contractors to the federal government or to a federally regulated client, so you're sending your people to Bell Canada or to Rogers or to a bank that are federally regulated, you, staffing company, still are provincially regulated. It doesn't matter that your employees go work for in a customer site that is federally regulated. So all the laws of provincial standards apply to us, even if our customer is federally regulated. We also have to take into consideration what the definitions of an employee is versus an independent contractor. And employers are not allowed to treat employees as if they are not employees under most provincial legislation. In other words, you can't just say, well, we only hire independent contractors. If they look like an employee, smell like an employee, act like an employee, or treated like an employee, then for all intents and purposes, under most employment standards legislation in the provinces, they say, thou shalt not try to fool us and get yourself out of all of your obligations to your employees. You can't just call people an independent contractor. And the burden is on the employer to prove that the circumstances that exist in reality of an independent contractor really exist. Otherwise, the workers default to be an employee of the staffing company and of or any kind of company. In 2017, where this was common law, these definitions of what an employee and an independent contractor were, and all of the rules or the tests that we used. A judge would say, let's take a look at the test. Do they have, I'll talk about them more later, about the risk of economic loss, or are they integrated into the workforce, or, whatever. The different, do they provide their own tools and equipment? Before that was all common law, so a judge had to look at the circumstances and say, looks like an independent contractor to me, or smells like an employee to me. In 2017, in the province of Ontario, the government said there's been enough common law decisions to make it pretty clear. If you're work for a temporary staffing company, you're not the employee of the customer, and you're not an independent contractor, except for when you're never the employee of the customer. And there are circumstances where you can prove that all of the reality shows that you are in fact an independent contractor. So in other words, you are never the employee of the customer, and you would default to be the employee of the staffing company unless you could prove that all of the circumstances exist to prove that you are in fact an independent contractor, but never the employee of the customer. Most provinces don't have this codified or codified, but some provinces, like Ontario, have basically said, hey, there's been enough common law decisions here that we're just going to go ahead and write this into law. So, what are some of the things that are covered in this Employment Standards Act? Now, um, I'm sitting in Ontario, and I read the news every day and see the news for Ontario, and I got to look it up and I pay attention. Federally, I look at all the different provinces, what's going on across the country. Um, so I'm going to talk to you. I apologize if I use too many Ontario examples. Probably doing that unintentionally, but it can happen. But I'm going to give you examples of the kinds of things that are covered by all of the province's Employment Standards Acts. All of the Employment Standards Acts have got the vast majority of it in common. It's the details that differ. In other words, all of the provinces have a minimum wage. The detail of what that minimum wage is different from province to province. All of the Employment Standards Acts, each province's individual Employment Standard Act has rules about when public holidays are, except for different provinces have most of the same public holidays, but a couple that are different. And sometimes they're the same day, Louis Riel Day in Manitoba and Family Day in Ontario. Same day, third Monday of February, just a different name. So these are the types of things that exist in employment standards legislation from province to province. Things like having notices and posters and brochures and information available to employees so that they know what their rights are under the Employment Standards Act. Things about hours of work and eating periods and how long a person can work before they get a lunch break and rest periods. How wages are to be paid, when overtime kicks in, and how it's calculated. There are rules about tips and gratuities. Hey, we know, for example, it's kind of interesting. I think in the United States, they clearly have different rules because um, the the federal government. We talked Donald Trump when he got elected said, "Oh, we're going to make tips tax free. If you take tips, you don't have to pay income tax on it." Well, that's not the case in Canada, and you can say, well, do they have federal and state rules? So yeah, he can make it tax free for federal tax, but he can't make it tax free for state tax. So it's all gets very confusing when we hear about this stuff. But just know this much: in Canada, each province has rules about how tips or gratuities are handled for the purposes of determining a person's income. Every every employment standards piece of legislation has a minimum wage requirements. There are different. We're going to hit a page later on that shows you the different kinds of leaves, things like pregnancy leaves, parental leaves, personal emergency leaves, family caregiver leaves, family medical leaves, critical illness leaves, child disappearance leaves. So if you may not even know this, but if a family has a child who disappeared or was kidnapped, abducted, you can take a year off. A parent can take a year off and be guaranteed that they'll have the same or a substantially similar job available to them with their employer after a year. There are public holidays, again, for each province are different. I've talked about that. Vacation and vacation pay, how much we're entitled to based upon how long we've worked for the company, which is different, by the way, than what might be in your employment agreement. So, different kinds of laws. We talked about contract law. In your employment contract or the employment contract that you give to your employees, it will stipulate what their vacation entitlements are, and it shall not be ever less than that which is stipulated in the Employment Standards Act. But it could be more. So you might offer employment to a person where they start off with 3 weeks vacation or 6% of their wages. And the Employment Standards Act might say that when you start off with a company, you're entitled to 2 weeks vacation or 4% of your wages. And so we're allowed to do that. We're allowed to now create a contract law, a term of the contract that is better than the minimum wage in the Employment Standards Act, but we are not permitted to create a law in a contract that supersedes or is less than the laws that are written under the Employment Standards Act. So you've heard the expression, you cannot contract yourself. That's the contract law. You cannot contract yourself out of the law. So you can't say, I'm allowed to fire you and not give you notice. You can't say, I'm allowed to discriminate against you and override discrimination laws. So we can offer something better. We can't offer something less. Now, just to be cute about it, the law in most provinces actually says that the bundle or sum, I'm rephrasing, the bundle or sum of the contract offerings must as a whole exceed the individual aspects of the Employment Standards Act. So you could say to somebody, geez, yeah, in the contract, you only get 9 public holidays, and on the 10th public holiday, you have to work because, I don't know, we're a church and you have to come to work on Christmas Day because we have lots of masses on Christmas Day, but we'll pay you 5 times your normal rate on Christmas Day. And if the employees agree to that, then you could say, hey, yeah, what we offered in whole was better than what was under the Employment Standards Act. So, so if you took, a couple of things and bundled them together and said they're better, you can do it. But generally speaking, you just can't offer less than what the minimum standards are in law. Termination rules, how much notice of termination we have to give a person or pay in lieu of a notification, equal pay for equal work. There's special legislation in some provinces, particularly in Ontario, that apply to only temporary help companies. Not to, there's employment agency licensing requirement, which is kind of covered under the Ministry of Labor, not the Employment Standards Act, but there are specific rules for temporary help agencies that we'll get into in some provinces, particularly in Ontario, that affect Employment Standards Act. And of course, each piece of legislation, Employment Standards Code or Employment Standards Act in the province, not only talks about what's in the law, but they talk about how the law will be applied, what the penalties for violating the laws are, what the rules for appealing decisions under the law are. Those kind of things are all included in the legislation. So here's an interesting example of how minimum wage in each province under their own unique Employment Standards Act can differ from province to province. So in the province of Ontario, the minimum wage today is $17.20, and in Quebec, it's $15.75. Pretty significant difference considering the fact we've got a shared border. We see that Manitoba and Saskatchewan, which I think have a lot in common in terms of industries and so on, but we've got an 80-cent difference. And the reason for that is because at some point in time, I'll get into this a little bit more in the next slide, but at some point in time, the Manitoba government said, geez, we're going to stop this from being a political thing and we're just going to tie it to the consumer price index. And so during pandemic and towards the end of pandemic, when there was a lot of inflation, that automatically triggered increases in their minimum wage, whereas other provinces come up with other different ways. So the federal minimum wage in Canada is set based upon the consumer price index. So I didn't look it up, I'm sorry, what it is today, but as of April 2023, the minimum wage was $16.65, and it was up from $15.55 the year before. I think it's here, April 2024 went up to $17.17, 3.1. So it's probably up to about $17.50 this month. It'll change again this month in April. So it's going to go up like 2.5%, which is what the consumer price index has increased over the last year. So some levels of government have passed a law. In other words, they've codified, written a statute that says how their minimum wage is going to be calculated going forward. In Ontario, they don't do it by that. They typically, for a 2, 3, 4, 5 year period, they pass laws saying, oh, it's going up by $1 this year, and then by 50 cents the next year, and then by 50 cents the next year. And they say in advance how much is going to go up in real dollars, not in percentages. And in other provinces, they passed laws that said it's going to follow the consumer price index and it's going to change as inflation changes. And some other places still, every couple of years, the politicians get in there and they debate it, and they go to committee and they make a recommendation, and they have first and second, third and fourth reading, and it passes by law, and they do it individually to modify their Employment Standards Act on an individual decision basis. So, for example, the example I gave you was in Manitoba. The minimum wage increased to $15.30 in October 2023, towards the end of the pandemic, but there was so much inflation in that period, it actually increased twice that year. So they've got a rule that says once inflation goes past 2%, we have to increase it right away. And then, but it went up by like 6% that year. So they actually had two increases to their minimum wage in 2023. And then it rose from 50, then inflation went back down again, and it rose from 1530 to 1580 in October 2024. And effective this year, they anticipate it's going to go to $16 from 1580. So the increases are slowing down based upon the consumer price index. So again, there's an example. So, we ask the question, how is it decided? Well, it's decided by the politicians. And it's either decided by passing a law, going first, second, third, fourth reading in royal assent, or it's passed by passing a law that has a formula based upon consumer price index, or it's by passing a law that says for the next 5 or 6 years or 2 years or 3 years, it's going to be this fixed amount, but it's always done. And there's debate. Does the increase of minimum wage affect inflation? Some people say no, that it just keeps up with inflation and allows people to have a minimal cost of living increase, and so that they can keep up with the world as prices run away. Other people say that when you increase the minimum wage, it's pervasive. So if you increase the bottom people by $1, then the people who earn a little bit more than minimum wage go up by 80 cents. And if the people who earned $5 more than that, they go up by 30%, so that if you're going to give the bottom guy a raise, you got to give the next people a raise too. Otherwise, all the bottom people are going to start passing the people up ahead of them in higher wage categories. So there's some indication that minimum wage is inflationary. And in reality, there's not a lot of great evidence that it is inflationary. There's more evidence that union negotiations, where we're talking about higher wages, up in the middle wages, the 40, 50, 60, 70, $80 an hour people, that when you bake in a 5% or a 6% wage increase, that you're baking in an increase in costs of everything that they make, and so you're baking in inflation. There's a little more indication that those types of wage increases, but the vast majority of people, about 80% of the people in Canada, are not minimum wage, and they're not unionized, and so wages in general tend to be more of a supply and demand type of function than it is a legislative function or a union function. So here's some examples for how minimum wage, by the way, I always use for these presentations the Retail Council of Canada, because they update minimum wages on their website all the time. Otherwise, you have to go to every province and look it up. So they do a great job of keeping it there. So on the presentations that you were sent, I think there's a hyperlink in there, or at least it tells you, where you can go find those if you're looking for them for all the provinces in one place. But this gives you a little bit of an idea of, sort of, for example, in Alberta in 2018, it went to $15 an hour. That seems like it's low. British Columbia, June 2025, went to 17, is going to go up to 1740. Um, uh, Effective as of June 1st, 2025, and will rise to 1785 per hour. Every province has got some different kind of rule. Effective as of October 1st, 2025, minimum wage in Manitoba will rise to $16 an hour. Let's go over here to Ontario. Effective last October, went to 17.20. Not sure what the next scheduled increase is going to be. So every province has sort of a different process. The Employment Standards Act also talks about payroll requirements. So it dictates that companies have to have regular payroll periods, and that they have to be published, and they can't be changed, without going through a particular process. And so if you're a biweekly payroll, you have to always be a biweekly payroll. If you're biweekly payroll that has biweekly payroll with monthly commission, then you have to always be that. And so it gives you some minimums, frequencies. It tells you the rules about how you have to publish it and how you have to keep it and keep it consistent. It talks about direct deposit a little bit. I mean, originally, all the legislation was written as if we were going to write paychecks to people, and it was very confusing when along came direct deposit because the language didn't fit very well. So one thing they said for sure when they introduced some of the changes in all provinces is that the direct deposit must go into a bank account that is in the name of the employee. So you can't put it into your mother's name or into somebody else's name, so that you can, or your brother's name, so that you can do something about avoiding taxes and make claims that you didn't get paid, or there's no issues for Revenue Canada if they need to audit someone, so on. There's a requirement in the Employment Standards Act, in all the Employment Standards Act, to give statements of wages. That requires not only a pay, they refer to it as the stub, the pay stub. So you don't need to give a summary statement, but most employers do, of here's all the checks you got for the last year, although most employers do and most software does. But there is a minimum that every payment of wages has to be accompanied by a stub. So most of us will receive an email that says, hey, here's your stub for the check that's the money's going in your bank account tomorrow. Or they'll say, here's the stub for your current earnings in the month or whatever. Or you go online and go into your portal and you look it up. Or if you're writing checks, it's got to be with the check. It's got to be on the pay stub. And there's certain minimum things like, for example, it has to break out different types of pay. So if you've got regular pay, it has to show regular pay. If you've got overtime pay, it has to be broken out and calculated as overtime pay. If you have vacation pay, it has to be broken out and shown separate as vacation pay. I'll tell you a story. Probably around the late 1990s, mid 1990s, early 1990s, in the province of Quebec, our pay stub did not, in our effort to make it bilingual, we screwed up, or make it in French, we screwed up, and we did not differentiate the vacation pay from the regular pay. Even though it was shown as a separate line, it said other or something. It didn't say vacation pay. And one of our temporary employees went to the employment standards branch under the norme de travail, the employment norms, which is the Employment Standards Act, and they said, "Hey, I didn't get my vacation pay." And the norme de travail made a decision. They said, even though it's pretty obvious to us that that was vacation pay, you didn't classify it as vacation pay, and so therefore you owe the person more pay. We're gonna have to take this other pay and their regular pay, add them together, and then calculate 4% vacation pay, and you're gonna have to pay this person their 4%. Now, also, most provinces, if one person makes a claim, the government, the Employment Standards Branch, doesn't take that one claim for that one person and treat it like a class action suit and then give it to everybody that it applied to. It would require each individual to make a claim. That didn't happen um, because I think it was most obvious to most honest people that that was their vacation pay. But we went ahead and changed the wording because le nom de travail, the Employment Standards Act, said it had to, on the wage statement, specifically identify vacation pay and the calculation of vacation pay. So those laws exist. There are things like how to handle court orders, things like garnishment of wages. There are statutory deductions, Canada Pension Plan, unemployment insurance, and taxes that are taken off of individuals' paychecks. That has to be shown, and there's laws that dictate how that has to be shown. And of course, the vacation pay has to be a special statement or show exactly how that was calculated. There are, if you're ever going to make uh, any kind of payroll deduction to pay for the trip, to buy the uniform, to repay the loan, there has to be pre-authorized written agreement that must specify the amount and the calculation of that amount. It's not permitted to have an agreement that covers faulty work. So you can't say you lost my tools, and so therefore you owe me $1,000 or $500 or whatever. None of that can be taken through payroll deductions off a person's check. There are special rules about cash shortages, but most of the cash shortages rules only apply if a person signs out their own cash box. So in other words, you go into the gas station at nighttime, you sign out your own cash box, you receive payments of cash, you give change of cash throughout the night. At the end of the day, your cash box balances. If there's any other employees that are allowed to touch that cash box or have access to that cash box, then you can't deal with payroll deductions with respect to cash shortages. You can only say, here, I gave you 100, give me 100 back. And if that transaction is late, you say, well, where'd my 100 go? There are some provinces that have special rules with respect to that. And I'm going to say to you that it almost never applies to us ever. So we, as employment agencies, temporary help suppliers, and contractors, can't be reducing anything from their paychecks. There's special provisions in Ontario that an AG cannot charge certain fees. A temporary agency cannot charge a fee to a worker or make payroll deductions for being an employee. They can't say, here's a service fee or a recruitment fee or I found you a job fee. You can't do any of that. You can't charge people fees for writing resumes, improving their resumes. You know, back in the 80s, there were all kinds of companies that helped, especially after the recession, 1980. There were all kinds of companies that helped people to look for jobs and find employment and redo their resumes. And some of those companies found their ways into also the recruitment and staffing industry. Very taboo-ish. Don't do that. It's a bad business practice and it's against the law. The Employment Standards Act usually deal with hours of work and weekly limits. And so, for example, in Ontario, you can only require, you can have an employment contract that says that they work 8 hours a day or 10 hours a day, 12 hours a day. There's special industries like the healthcare industry and unionized industries where you can have agreements to work up to 12 hours. But just generally, under the Employment Standards Act, you can't force a person on a regular basis to work more than 8 hours and threaten them to lose their job if they don't stick around for the ninth or the 10th or the 11th hour. Of course, a person can agree to work more, but you can't require a person to work more than that. And so each province has some special rules about how many hours there are between shifts. Like, for example, in Ontario, a person must receive 11 consecutive hours from the end of their last shift to the beginning of their next shift. Um, Now, here's an interesting thing. In most cases, employers must receive 11 consecutive hours off. Sorry, 11 consecutive hours off in a day, or 8 hours between shifts. What does that mean? Oh boy. Well, you could be, um, I'm terrible at making an example here, but there are examples of, say, for example, when a person's moving from day shift to night shift, like they're at the end of a 2 week period, and now it's their turn to go from day shift to afternoon shift or day shift to night shift. It's you can sometimes look at it saying, did they get 8 hours off, and or do they get 11 hours off in a 24-hour period? So there are different things that we look for with respect to those rules. It's not important. Every province is different. It's not important that you I said this at the beginning, that you memorize what the rules are. It's important that you memorize that there are rules, that there are rules about how long shifts can be, how much time off a person is allowed between shifts, and how many hours a person should have off in a 24-hour period. Your province and the circumstances of how that exists in different provinces will change. So it's important that you understand that those things are covered under the Employment Standards Act, not for the purposes of the exam, to memorize what the number is for any given province in Canada. So overtime rules. In Ontario, overtime begins at 44 hours, by the way, not if they worked more than 8 hours or 12 hours in a day. So here's one of these complicated things. 11 consecutive hours off of each day. A day is a 24-hour period. It does not have to be a calendar day. So a company can define what their day is from midnight to midnight, noon to noon, whatever, I don't know. They can define what their day is. They can't change the definition. People have to have 11 hours off in each day. They have to have 8 hours off in between shifts. Unless the total time worked on the shift is 13 hours or less. Hey, listen, it's complicated. There's also time off with respect to vacation days, 24 hours of rest of work in each week. So, we're all accustomed to having, say, 2 days off a week, but the rule really is in most provinces, is 1 day off in a week. And it's 2 consecutive days in 2 weeks. So if we went this week and next week, we'd have to have 2 days off in the middle, or 2 days off at the end, or 2 days off in the beginning. But over a 2 week period, you have to have 2 consecutive days. And so each province is a little bit different. Alberta has got some interesting time off, days of rest. This is vacation days. Rules, mostly because of the whole notion of remote camp work. So a lot of people in Alberta fly into or drive into or whatever, bus into camp, and they work on site, and then they have time off and they go away. So Alberta came up with rules that said you have to have 2 consecutive days of rest for each 2 week period. The example I just gave you, 2 at the beginning, 2 in the middle, or 2 at the end. In a 3-week period, say you went into camp for 3 weeks, then you're entitled to 3 consecutive days off before you do another 1 week, 2 week, or 3 week period. 4 consecutive days in a 4 week period. So if you went into camp for a month, then you'd have to have at least 4 days, a minimum of 4 days off in a row before you went back into camp for a week or 2 or 3 or 4 weeks. So each province has come up with some unique set of rules about their vacation days that are applicable to some of the common practices in their province. In Ontario, the calculation of pay for overtime pay is over 44 hours. And in certain industries, like the healthcare industry, it's 88 hours over a 2 week period. Not very many industries are exempt for the 88 rule. Most of them are time and a half for 44 in a 1 week period. We're going to get into special requests that can be made to the minister for your company or for circumstances. So if a person works more than, say, for example, $16 an hour, and they work more than 44 hours in a week, then every hour in excess of 44 hours would be paid at $24 an hour, which is 1.5 times or time and a half of 16. Ontario has introduced a 50% rule because managers in some provinces are not entitled to time and a half for overtime pay. The presumption is that managers have more flexibility, and even though they might be booking their hours, that they're going to be required to work long hours when long hours are required and not work when work is not required, and there are some different kind of standards around that. So we've got a lot of people who are paid by the hour, but they're still called a manager. So if at least 50% of the hours are worked in a job category that is non-management, then all of the hours are considered to be non-management for the purposes of calculating overtime. So you can't say, oh, you went to work on the weekend and you were the manager on the weekend shifts, but Monday to Friday, you were a regular employee. And so I'm not going to pay you time and a half on the weekend because more than 50% of the hours existed in a regular temporary employee's work hours, then all the employees, all the hours qualify for time and a half. And by the way, most companies wouldn't even have known or thought that the weekend hours might have been or could have been exempt. But the reality is that management hours are not exempt. I'm not familiar with temporary help companies that treat their employees as managers. It's sort of like a little bit of a conflict in definition there. But the same rule applies to non-temporary employees for regular companies and their own employees. BC's got some interesting rules because BC set some rules about hours of day, not only hours in the week. So let's take a look at this particular chart because BC will pay time and a half for hours over 8 hours in a day, and they will pay double time for hours over 12 hours in a day, and then time and a half for, I think, over 44 hours in a week. But it can work out that you don't work 44 hours. In this case, only 37 hours were worked, but because it was 8 hours on Monday, regular pay, 10 hours on Tuesday, so 2 of those hours were in excess of the 8 hour per day minimum. So 8 are paid at regular time and 2 are paid at time and a half. 6 hours on Wednesday, 13 hours on Thursday, long day. So the first 8 hours were paid regular. The next 4 hours between 8 and 12 were paid at time and a half. But everything in British Columbia over 12 hours a day is at double time. So this person picked up regular time, time and a half, regular time, time and a half, double time. The total number of actual clock hours was 37, but the total number of hours that they got paid for is a whole bunch different, right? So 6 hours at time and a half, which is equivalent of 9, double time, which is equivalent of 2, so that's 11. So there's 30 plus 11, 41 hours actually paid instead of 37 hours actually worked. There are minimum hours rules. Now, here's an interesting thing in the province of Ontario in the last government, before 3 elections ago, when Kathleen Wynne and the Liberal government were in power in Ontario, as they led up to the election, Kathleen Wynne made a ton of promises probably in an effort to either one, get some laws passed before she was gone, last chance to get this done, pass the laws, or two, make promises of laws to try to get reelected, make everybody happy for all the free stuff they got. And then when they lost the election, the conservative government repealed a ton of those laws. So they existed for a very short period of time under the end of the Liberal term, and then immediately, like I mean in the first week, the conservative government came along and said, take that back, take that back, take that back, put it back. One of those rules was minimum hours. So in Ontario, there was a rule that said, thou shalt not request or require an employee to come to work for any less than a 3-hour shift. If the shift is less than 3 hours, you can offer to them, but they can decline it, and there would be no penalty or reprisal. In other words, you can't push them down the seniority scale or fire them or never call them again or treat them badly and not give them their coffee break or something because they refused. That's called a reprisal. So in Ontario, the minimum was 3 hours, and you were required, if you called a person in for 3 hours or more, and if you called them in for 3 hours and it turned out to be less, you had to pay them for 3 hours. Even if you called them in and said, oh, gee, sorry, can't find the key, can't open the door, you can go home, because they showed up, they would have got a minimum of 3 hours. The Ontario government, the Liberal government, came along and changed it to 4 hours. And then the Conservative government came along, got elected, and they put it back to 3. So some companies, like for example mine, who I own a company that's one of my companies is in the healthcare industry, and we do home care, and we supply nurses and PSWs to seniors and ill people who are recovering at home. We had a minimum 3-hour shift. When the Ontario government changed it to 4, we changed all of our contracts to say 4 hours. Then the Ontario government came along, and the new Ontario government came along and said, no, 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 we're taking that back. It's going back to 3. Well, we didn't go back and change our employment contracts. So this is a perfect example now of where in our company, the law says there's a minimum of 3 hours that you can call a person in for work. And our contracts say 4 hours, they exceed the 3 hour, and the contract, because it is better than the statute, it becomes the primary law, the contract law, which is the greater of the two. So we've got minimum of 3 hours. There's a minimum of 2 hours in British Columbia. Alberta has 3 hours. And I told you the long story about Ontario, which was 3, went to 4, went back to 3 again. There are special rules in most provinces for young people. These are all written into the Employment Standards Act. What time is it? 2:11. We have passed our... No, we're not. We've got 20 more minutes before our break time. And again, as an example, in Manitoba, all young people 13, 14, and 15 years of age must complete a Young Workers Readiness Certificate course and obtain a certificate of completion that is signed by their parent or guardian before they can go to work. So Manitoba has taken an extraordinary step to try to protect young workers so that they don't go into dangerous workplaces or they're exploited by their managers or by people who might take advantage of the fact that they don't understand the laws or don't have the experience and knowledge to know what is safe or appropriate. Um, Restrictions on young people 13, 14, 15 years of age apply in most provinces on things like um, construction, drilling rigs, heights, um, herbicides. So you can hire young people to work for landscaping companies, but there's special laws with respect to them handling pesticides. There's often special rules in manufacturing, things like scaffolding, swing stages, pruning, cut themselves, removal of trees, and there's all kinds of rules about what kind of supervision must be provided to young people. Um, there is also equal pay legislations. Now, equal pay generally talks about um, gender. So you cannot have two people with exactly the same qualifications performing exactly the same job under exactly the same circumstances in exactly the same location, but them being of different genders and paid differently. So this is called equal pay for equal work legislation. Now, there's a complicated process that you go through for this. First off, got to ask the question, are the two people receiving two different pays? If they both receive the same, why are we asking the question? Move on. If they receive different pays, then we ask the next question, is there a difference in their gender? Is one male and is one female? If there is, that's great. If they're both male, that's allowed. If they're both female, that's allowed. You're allowed to have two females earning two different wages. There's a reason that you are paying them two different wages, but it's not gender discrimination. It might be something else, but this part of the law doesn't apply to that. So two men doing the same job, earning two different wages, not covered under equal pay. Two women, different wages, not covered equal pay. One man, one woman, one group of men, one group of women with different pay, continue on with the equal pay legislation. Are the employees required to perform substantially the same work? If they are, then yes, we're talking about this law. Do they work at the same place, same location? Or is one in Barrie, Ontario, and the other one in Toronto? Or is one in Ville Marie, Quebec, and the other one is in uh, Manitoba? If they're in different locations, and particularly different provinces, don't apply. But if they're different cities, what is different locations? Different locations are different locations. Like Mississauga and Toronto are going to be considered two different locations. Um, so we have to establish, are they working at the same establishment? Do you use the same skills to perform the job? One might be doing work manually, they're using a piece of equipment. One might be proofreading and the other one might be writing. Do they use the same skills to do the job? Do they use substantially the same effort to perform the job? So is one doing a lot of lifting, but they don't have, I've got a customer who's in the steel business and they have different types of steel at the different plants right across the road, right across the road from each other. And there's different physical requirements in both of those plants, even though people are hired at the same time and have the same job description and the same title, they're lifting different types of stuff. Do they have substantially the same responsibilities? If the answers to any of these questions are no, then this law doesn't apply. It doesn't mean that maybe they should be paid the same, or maybe there's some other thing, but this law does not apply. They have to be doing the same job, using the same skills, making the same effort, or expected to make the same effort, and have the same level of responsibility in order for this law to apply. And then finally, is there some other reason, like a seniority system or a merit system? Like for example, if you say, hey, if you have broken the threshold of laying more than 100 bricks an hour for 2 weeks in a row, you become a superstar bricklayer and you get a pay increase. If there's some kind of merit system, or seniority system based upon time that you've been employed with the company, or a system based on quality or quantity or any other factors other than sex that you can point to, other than gender, that you can point to that clearly explains why there's a difference. If you don't have some other system, the law says men and women performing the same job with all the same requirements are required to be paid the same amount of money. What almost happened in Ontario in 2018, equal pay. So this was one of those pieces of legislation that the Ontario government, before they got voted out of power, put into play, but they didn't get it through the legislature. So this gives you an indication of Bill 148 of what potentially can happen for us. And so we as advocates for our industry need to be aware that these kind of movements are in play, taking place, and present a risk to us. The Ontario government was going to set up a system where part-time, casual, temporary workers all had to be paid the same as the full-time permanent workers. So if that law had passed, then the part-time workers and the full-time workers at a company would have been paid the same. And then when they brought a temp in, we would have had to say, how much money do you pay the full-time worker for that? Then we would have had to pay our temp that amount of money and our temporary help worker. And then we would have had to quote a price or a rate based upon that, opposed to nowadays where we say, hey, all of our general laborers with, category 1 get paid this, category 2 get paid that, category 3 get paid that. All of our or we negotiate with people every time we hire them and we pay them that. So we're allowed to do those kind of things, but had this legislation passed, this equal pay legislation, it would have made it almost impossible for us to operate. So this gives you an indication of the kinds of things that are going on out there, putting pressure on our industry. In most cases, there are written agreements between us and the temporary employee. And these employment agreements can identify exceptions. And so, for example, let's say, you can say, hey, we want our workers to work 12-hour shifts because we supply people to hospitals. Now, I'm not in the health industry, I'm not a hospital, so the 12-hour rule doesn't exist for me, but my customer is a hospital, so I want people to work 12-hour shifts because that's what the hospital does. So they're going to work 3 12-hour shifts in 1 week and 4 12-hour shifts in the second week, then 3, then 4, then 3, then 4. And so as a result of that, and they would have worked 36, 48, 36, 48. If they worked 36, 48, they would have got no overtime in week 1. They would have got 4 hours of overtime in week 2, but they're only working 40, 36, and 48. They're only working an average of 42 hours per week over a 2-week period. They're working 84 hours, 42 hours a week. So if you worked 42 hours a week, you wouldn't qualify for overtime. But because of their 12-hour shifts, they're actually getting paid overtime on the second week where they work 4 12-hour shifts. So you can go to the government and you can ask for a written exemption to the director of the employment. And it can happen in BC, in Ontario, and Alberta. This is called an averaging agreement. And so you can say, hey, can we take our average hours over a 2-week period, over a 3-week period, and determine whether a person qualifies for overtime based upon that hours average? And you almost always, if you can establish this is a regular business practice, almost always get a special agreement from the province. So on Alberta renamed it. It's called a compressed work week. In Ontario, it's still called an hours averaging agreement. Most companies, if it's a regular business practice and they're going to do it year in, year out, then they go and ask for these hours averaging agreements. They have to specify whether it's 1 or 2 or 3 or 4 weeks. They have to indicate the work schedule and when the day, what your definition of a day is and what your definition of a week is. Does it go midnight to midnight, like a 12:01 to 11:59 p.m. or whatever? Does it go from Sunday midnight to Sunday midnight, Saturday midnight to Saturday midnight? It has to define the work day, has to define the work week. It has to define when this averaging hours agreement is going to start and stop, and so it has to be renewed. So it has to be for a 2 or 3 or 4 year period, and then it has to be renewed again. It has to be written into the employees' agreements, and they have to agree to it in advance of them getting hired, not after they got hired. Rules about lunch. We've got 8 more minutes before our lunch break. How many hours can a temporary worker work before they're required to take a break? Well, every province is a little bit different, but usually it's 5. So when we send a person on an 8-hour or 7.5-hour or 9-hour shift, we know that they start at 8 in the morning, 9, 10, 11, 12, 1, 5 hours. They have to take their lunch break by 1 p.m. if they started at 8. You're not allowed to have a person work more than 5 consecutive hours without getting their lunch break. The lunch break in Ontario is unpaid, and it's 30 minutes. It's not an hour. It's 30 minutes. So, most companies, they say, hey, you got a lunch break once a day, take your lunch when you're hungry. And most companies say, you work, here's your hours. You work from 8 in the morning till 5 in the afternoon or 4:30 in the afternoon. That includes your break, your lunch break. But when you're punching a clock and you're working by the hour or you're filling out a timesheet, these rules matter. And so the person has to have a break within 5 hours. And the Employment Standards Act in Ontario does not talk about additional breaks, those coffee breaks. So, for example, at one of my customers that we do consulting work with, let's spend with temporary help, the coffee truck literally pulls into the back once in the morning, once halfway through the morning, once at lunchtime, once halfway through that. They honk the horn, and that dictates when, if it pulls up by a bay, that dictates when that break is going to take place. And the company says, we'll give you enough time, extra time, to go out there and get coffee or a drink or a snack when the truck comes up. 15 minutes in the morning, 15 minutes in the afternoon, 30 minutes at lunchtime. And so the lunchtime break is mandated by law. The other ones are company policy. And if they're not written into the employment agreement, then theoretically it's established by common law because that's what they do all the time, and it's become a common practice. So vacation entitlement is often defined, well, is always defined in the Employment Standards Act, but it's also often defined in the employment agreement. It's somewhat unusual to say vacation shall be offered in accordance with the Employment Standards Act. Usually it either repeats what's in the Employment Standards Act and spells it out, or it's better than what's in the Employment Standards Act. And in some provinces, it's a minimum of 4%, and it's a minimum of 4% from the first day that you begin. There used to be some provinces that said you weren't entitled to vacation and vacation pay or something within the first 3 months of employment. That's all gone. Everybody's entitled to vacation entitlements. In other words, it starts to accumulate. You either get paid for it or it starts to go into your bank for entitled future vacation from the first day of employment. And now in some provinces, like Ontario, it says after 2 years, 5 years, after 5 years of consecutive employment, it automatically grows to 3 weeks or 6% vacation pay. So, whereas most employment contracts kind of say, hey, in your first couple of years of employment, you get 2 weeks. Then after a certain period of time, you get 3 weeks. And then after 10 years of employment or whatever, you get 4 weeks. And after you've been here forever, You might get 5 weeks. Those are written into the employment agreement. The Employment Standards Act generally deals with the minimum 2 weeks, or in the case of Ontario and maybe some other provinces now, it tells you when it escalates to a larger amount of time. I'm not familiar with any province that has it written into the legislation beyond the 5 week period that exists in Ontario after 5 years of employment. Now, by the way, it can be a part-time employee. It can be a temp employee. It can be a temporary employee who worked for you on and off during the course of the year. It doesn't matter how many hours they worked during that year. It counts as a year of entitlement towards their 5 years to determine when they go to 3 weeks. There is a way around that, and that is that you actually terminate the employment of your temporary worker, and you tell them your employment is terminated. Here's your record of employment. Here's your termination letter. Here's your termination pay. You're fired or laid off permanently. You're eligible to reapply for a job with us again at some point in time in the future. And if that happens and you reemploy them, then theoretically the clock starts again. But the government is on to us. You or whoever would terminate the employment, then reemploy them for the next assignment, then terminate the employment and reemploy them. And they refer to it as continuity of employment. And so you can't make the paperwork to be incongruent with reality, disparate with reality. So if the reality is that they work on a temporary assignment, then they usually have a couple weeks off, then they start another temporary assignment, then they have no time off, then they start another temporary assignment, then they have 3 weeks off, then they start another temporary assignment. You can't keep firing them at the end of every one of these things. You can probably get away for that within a year, but once they've been strung together into the second year, then the government looks at this as continuity of employment, and they treat that successive temporary assignments as being one term of employment. That is for the purposes of calculating things like eligibility of vacation pay and eligibility for notice of termination. Vacation pay example. So pretty straightforward. The person earns $16,000 a year, and they are entitled to 2 weeks vacation or 4% vacation pay, and 4% of $16,000 is $640. This is a very low wage worker, part-time worker, but it's what we refer to as accrued vacation pay is when you earn it and then you say, now I'm going on vacation. I'm going to use the vacation days in my bank. Or you pay it. You sign an agreement that says to them, we're not going to accumulate vacation pay, but you've signed an agreement that says we can pay you on each check the equivalent of 4% or 6%. But you either take that 4% and put it in the bank and accrue it or hold it to be used and taken at a future point in time, or you sign a special agreement that allows you to pay it out when they get it. It's 2:30. I'm going to deal with public holiday pay, then we're going to take a break. So public holiday pay, temporary employees, we talked about the days that exist, but in calculating the days that exist, pretty much everybody earns vacation pay from the first day of their employment. In some provinces, people don't accumulate vacation pay in their first 30 days of employment. So you can't work for a week and then qualify for public holiday pay in the second week. But in some provinces you do, because it's based upon a calculation of how much you earned in the 30 days prior. So if you only worked for 1 week out of the 4 weeks in the 30 days prior, and then a holiday came along, you only worked a quarter of the available days or in the 30 days prior. So your vacation, so your public holiday pay would likely be a quarter of a day, if that makes sense. And it typically, um, tell you what, this can get a little complicated. So why don't we, it's 2:30. Why don't we take a break until I've got 2:31. We'll take a break until 2:41. We'll come back. I'm going to give you an opportunity to ask me some questions in case I've confused the heck out of you. I can confuse the heck out of me. And then we'll start this public holiday pay calculation thing again because it can get a little bit confusing. So I'll go back one slide and we'll start it there again. Okay, guys, I think you're all muted anyways. I'm going to mute mine and I'll see you back here at 2:41. See you soon. Back. All right, hopefully everyone is back online again. Want to take this opportunity before we jump into public holiday to ask you if you want to pop off your mute um, on your computer by clicking the little red microphone and ask me any questions that you might have up until this point in time before we start rambling on again. We're good.
Good.
Rudolph, I see your microphone's off. Do you have a question?
All good for me.
All good for you too. Okay, good. Okay, guys, we're going to jump back into public holidays. We've got a screen here about the civic holiday in Ontario. I hope everybody's in Ontario. I'm giving a lot of Ontario examples. The civic holiday in Ontario is an interesting one. It's not a provincially regulated public holiday. The story behind the civic holiday in Ontario is that it originally started off as Lord Simcoe Day, and I think it was introduced by maybe the province of Ontario or Simcoe County or something, or not the city of Toronto or Simcoe County or something, and they made it a municipal holiday, like a city holiday. And then it became really popular, and other cities started to recognize it. And then companies across but other cities didn't necessarily pass any laws, and it's not really within the constitution for cities to offer and require companies to have holidays anyways. It's out of scope of their jurisdiction, and so it's become a thing. It's become like a common law holiday recognized by most employers that follow a lot of, but not necessarily all of, the same laws as a public holiday. But I challenge anybody to go out there and find any legislation that specifically talks about the civic holiday or the first day of August, or the first Monday of August in Ontario. Most employers are closed in Ontario on the civic holiday. However, you'll find that pretty much all retail stores and other places that on public holidays that you would on Christmas Day, Boxing Day, New Year's Day, you would see closed. On the civic holiday, you probably see them and restaurants open. Those places probably pay time and a half to their workers, or they give them a day off with pay in lieu of that day. So in other words, they might work on the Monday, but then they give them Tuesday off or something like that, or some day off for the next week. So the civic holiday is an interesting one, but it's not typically counted in the public holidays. And I'm just going to roll through off the top of my head examples of public holidays in Ontario. Obviously, other provinces have some of the same days, and some of them are different. I mentioned Saint Jean Baptiste Day in Quebec and Victoria Day in Ontario. I mentioned Remembrance Day in Alberta. I'm not sure if Alberta has Family Day, but if we start at the beginning of the year and we say, okay, there's New Year's Day, then in February, Family Day or Saint Jean Baptiste Day, or it has different names in different provinces in February. And then we have Good Friday around Easter, but not Easter Monday, although a lot of places are closed, like schools on Easter Monday, but not a paid public holiday. The paid public holiday is Good Friday. And then we move into Victoria Day in May, Canada Day at the end of June, then not a civic holiday, but the first day of August in Ontario, the civic holiday. So I'm not going to count that one. We've got Labor Day, the 1st of September, first Monday of September. That is in all provinces and federally. And then Thanksgiving Day. What am I missing? And then Christmas Day, Boxing Day. What did I miss in there? I'm sure it sounds like I missed one. Um, Typically, we've got 9 public holidays and 10 holidays in total throughout the year, 9 days in total throughout the year. So it's a teeny little bit under the 4% rule, where 4% represents 2 weeks, 5-day weeks when we're calculating vacation pay. When we calculate the amount of money that a person gets paid for staying at home, not coming to work on the public holiday, there's a simplified rule in the province of Ontario. Other provinces don't have detailed calculation in the legislation, although it's in the regulations. I'll explain the difference between legislation and regulations in a second. But in Ontario, the simplified rule is that you take the total amount of gross earnings in the previous 4-week period that pre-exists preceding the public holiday. So if we've got July 1st, then the total gross earnings in 4 weeks prior to that. And in that 4-week period, then you divide it by 20, which on average represents 5 days a week for 4 weeks, 20 days. Divide it by 20, and you'll get an average day's pay. So if a person only worked 1 day out of the preceding 4-week period, then they would qualify for 1/20th of 1 day's pay. So if they earn $200 for that day, they would earn $10 to take the day off. So it doesn't matter that they were scheduled to work on that day or not scheduled to work on that day. All that matters is that they're an existing employee, that they worked somewhere in the 30 days in the 4 weeks immediately preceding the holiday, and that they're still employed with you, and that they work on their regularly scheduled work day that immediately followed the holiday. So that doesn't mean Tuesday. That means their regularly scheduled work day. So let's say, for example, people was a part-time worker, only worked on Sundays. They would work on Sunday, 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 4 Sundays immediately preceding the holiday, 4 days. You would take that 4 days pay, add it up, $200 a day, $800, divide it by 20. Then on the Monday, even though they were not scheduled to work, they would qualify for 1/20th of $800 on the condition that next Sunday, the day, the regularly scheduled work day, immediately following the holiday, they worked. Now, if they asked to have the day off and you gave it off, that's not a regular scheduled work day. It's the Sunday after that. If they asked for vacation, that. But if they took the day off, if they, without asking for permission, they called in sick, they didn't show up, then they would not qualify for their 1/20th of the amount of money. So Megan is entitled to, for in this example, entitled to a public holiday on Canada Day. She did not earn wages during that 4-week period. Therefore, her average day is 0. She didn't work for 4 weeks. Didn't send her on assignment for 4 weeks. She earned 0 in that 4-week period. So along comes the public holiday on July 1st. She gets 0. But Irina, she gets $120 a day for 5 days. So $600 a week. She worked for all 4 weeks, $2,400. Irina earned her $2,400 in the 4 weeks preceding the holiday. So we take the $2,400 and divide it by 20, which happens to be work out $120. So she got her regular average day's pay on the public holiday. The So there's some interesting things in Manitoba. Employees who consistently work the same number of hours get 1 regular day's pay as a general holiday pay. So if the employee always is supposed to work from 9 to 5, 9 to 5, 9 to 5, 9 to 5, it doesn't matter that they had a couple of sick days in there. They get 9 to 5. They get their 8 hours pay. However, for employees whose hours vary, so they get paid for only for the hours that they work, and each week it works differently, then their pay is 5% of the 4 weeks immediately preceding the holiday. If you're any good at math, you'll know that divide by 20 is 5%. It's the same thing, except for they use different language to explain it. So, if you took 100 and divided it by 20, you're going to get 5 20s. It's 5%. So it's the exact same calculation, done differently in different provinces. So in Jordan, here's an interesting one. Jordan ends a 6-month assignment on Friday, February the 17th. And he's been earning $800 a week while on assignment. Then Family Day falls on February the 20th, so 3 days later. But his assignment ended on February the 17th. He's offered another assignment that begins 1 week after Family Day on the 27th. So his next regularly scheduled workday is a week after the holiday. And he says, yeah, I'll take that assignment. So if Jordan shows up on the 27th, then he will have worked on his regular scheduled workday. And so therefore he would get his $800 a week times 4 weeks, $3,200 divided by 20. He'd get his 3,200 divided by 20, or his regular pay on that day. Now, if Jordan's employment had been terminated, if we said, hey, Jordan, thanks a lot for working on this 6-month assignment with ABC Company, your assignment and your employment is now over. You issued an ROE, you gave him his termination notice, you gave him enough notice that he had notice towards the end of his assignment, so he got his termination pay or his notice period was fulfilled. Then, and you did not offer Jordan an assignment to start on the 27th, then he would not have been entitled to receive his public holiday pay, because there was no regularly scheduled day after, and his employment was over. Now, to make matters even more complicated, if you phoned him up on the 25th or the 26th, you said, hey, Jordan, we'd like to re-employ you. We'll send you an employment agreement. If you accept it, I've got an assignment that starts on the 27th. Then technically, he still doesn't qualify. Except for, as I mentioned to you earlier, the governments tend to not look kindly on that. And they'll look at a pattern and they'll say, did over the course of a year or more, did Jordan start, stop, start, stop, start, stop? And are you using a record of employment and termination as a means to make it look like on paper that you don't have continuity of employment? And if the facts show that there was really continuity of employment, just breaks in employment, then you could be found to have to go back retroactively and pay that person for those public holidays that you didn't pay them for because, I'm going to use this word lightly, pretended like his employment was terminated. Now, in reality, his employment could have been terminated, and in reality, circumstances might have arisen that you were able to call him back to work and rehire him again. But if there's this pattern over a year of fire, rehire, fire, rehire, fire, rehire, the governments look at that and treat it as continuity of employment, and they don't recognize the individual firing along the way. Yeah, so that's Jordan's public holiday pay. Premium work for working on a public holiday. If a person is asked to work on a public holiday, then we are required in most provinces to pay the person time and a half for having worked on that holiday. So they, in essence, get what we call, in layman's term, double time and a half. So they get their regular day's pay, that average divided by 20. They get their regular day's pay for staying at home, but they didn't stay at home. So they get that anyways. And then they get time and a half for going to work, for having worked on the public holiday. So they got their regular statutory holiday pay, plus time and a half for the hours they worked on the day. They went to work for 4 or 5 or 6 or 8 hours that day. So if they normally worked 8 hours, they got paid that for public holiday pay because they could have got that for sitting at home. Then they got paid time and a half for going to work for, say, a full day, 8 hours. So we add those together, double time and a half. So there is no such thing in law. You're not going to see in law, it's called double time and a half. It's called public holiday pay plus premium pay or time and a half for working, which happens to work out to be time and a half. And so henceforth, people often say, yeah, I got time and a half for going to work on the holiday, but they would have got time for sitting at home. They say I got double time and a half for working on the holiday, but they would have got time for working at home, staying at home. They got time and a half for going to work. Works out to be 2.5 times their regular wages.
Sorry, Steve.
Yes, sir.
Question for you. Wasn't there something, I'm not sure if it was Quebec or Ontario or BC, wasn't there something like if you worked the holiday, but you could do a replacement of the holiday?
Yes.
You take another day off?
Yeah, absolutely. But you still get the day off with pay. So
But you still get time and a half for the day you worked?
you
or?
get time and a half for the day that you worked, and then you get another day off with pay. Does it make sense?
Yeah, I wasn't sure if the day off was still a time and a half or not, but okay. Makes sense.
The I'm going to stand correct on that. My apologies. I gave you the wrong answer.
Yeah.
If you regularly plan to have a person to, say, for example, they normally come to work on, say, Tuesday or Wednesday, and they normally get paid for Tuesday or Wednesday, you can say to them, you can request that they work on the holiday and they get paid a regular day's pay as if it was them coming to work on Tuesday or Wednesday. But then they get Tuesday or Wednesday off at time and a half. So the example I gave you on the previous screen is if they have no other day off. And the question you asked is, what if I give them Tuesday off? And so the answer is, first off, they have to agree to that in advance.
Right.
They get paid regular time for working on the holiday, and then they get a day off with pay. So they're the same as the person who took the day off and didn't work. In other words, they
Right.
got
Yeah.
one day off with pay. So I apologize, I gave you the wrong answer the first time.
It was true.
The couple little nuances around that is that if that's a regular policy that's part of their agreement that happens all the time, that's okay. You can ask a person to do that and they can say yes, but you can't force a person to do that. You can't say, sorry, you have to come to work on Monday, but I'm going to give you Tuesday off. If that's not a regular part of your employment practice that was in your pre-existing agreement, or they didn't ask you and you said yes, they can't force that. You can say, no, I'm going to take Monday off. I'll come to work on Tuesday. You can refuse to do that. They can't just throw it at you and force you to do it. Okay. Okay. So termination of a good question. See, if I give the wrong answer, it's a good question. The termination of assignment is not termination of employment. So I've mentioned twice already today continuity of employment. That's when you have an assignment end and you've got a break, and the assignment end and you got a break. Every time the assignment end does not mean your employment ends. So the termination of assignment is not the end of employment. The only way that you can make it the end of employment is if you tell them it's the end of employment and you go through the proper notices of end employment that you probably would go through. So if you're going to treat the end of an assignment as the end of employment, you got to start to think about now things like, what does the law say in terms of how many weeks of notice I have to give a person? So even though you might have said to them, hey, I got an assignment for you that goes until the end of March, March 31st is the last day of the assignment. If you want that to be the end of their employment, you have to, and they've worked for you for a year or two, and they're entitled to 2 weeks notice, you have to tell them 2 weeks ago or more. This is to remind you that on March 31st, it will be the last day of your assignment, and it will also be, we are notifying you, that will also be your final day of employment. And we will issue a record of employment, and we are now giving you your entitlement of 2 weeks notice of the end of your employment, and we will pay you out any unpaid vacation pay and all the things that you would normally do when you terminated a person's employment by giving them notice or pay in lieu of notice and a payout of their vacation pay and a record of their employment. So if you don't do that, then it just becomes a discontinuance of employment. In other words, a break, like a layoff, and then they're going to continue their employment when you call them back again for another assignment. So an employment agency is required to provide either 1 week's written notice of pay in lieu of notice or a combination of both. Listen, if it all, we're going to get to the point on how much notice is required. Okay. Termination, employees have the same rights, temporary employees have the same rights as regular full-time employees. They're not treated differently when it comes to termination and severance of employment. So there's no separate set of rules. Later on, I'm going to talk to you about an old phrase in the legislation called elect to work. And it used to say an individual has the right to elect to work or not to work when requested to do so. So that was fancy legal phrases to mean a temporary worker or an on-call worker, that they were not entitled to notice of termination. That was repealed and taken out of the legislation in 2000, 25 years ago. Surprisingly, still, some people say, oh, you're not entitled to it. You're an elect to work employee. Not the case. Temporary workers are entitled to all the same privileges as regular workers, and they are not exempt from notice of termination. You can, when a person's employment is going to come to an end, they can receive notice in writing. So they can say, hey, in 3 weeks from now, your employment's over, and they will have met their notice requirements. Notice requirements change depending on how many years a person's worked for you. That's on the following screen. But if they work for 1 year or less, then they're entitled to 1 week's notice. If they're in their second year, they're entitled to 2 weeks' notice. If they're in their third year, they're entitled to 3 weeks' notice. You can also give a person pay in lieu of notice. You can say, oops, I forgot to give you notice, or I didn't know I needed to give you notice, or something happened and I can't give you notice, but you're entitled to 2 weeks or 1 week. So you can give a person the pay instead of the notice. So you can say, I'm giving you 2 weeks notice, but I don't have work for 2 weeks. So you can go home today and I'll give you 2 weeks pay. Or if they worked for less than 1 year, 1 week's pay. I'm sorry, I didn't give you 1 week's notice, so I'm going to give you 1 week's pay. So this is what we refer to as pay in lieu of, in place of giving them notice. Or you can give them some combination thereof. You could have an employee who worked for you for 9 months, and so they're entitled to 1 week's notice. And you could say to them on Wednesday, at the end of the day on Wednesday, hey, I just found out that I have to terminate your employment on Friday. You're entitled to 1 week's notice, but that's not 1 week's notice from now. So I'm going to get you to work for the next 2 days, and I'll pay you 3 days in lieu of notice. So it's a combination of the notice, 2 days of notice, and 3 days of pay for their 5 weeks, 5 days or 1 week combination of pay in lieu of notice. So you can generally, in most provinces, it's 1 week of employment for 1 week of notice for each week of employment, up to a maximum of 8 weeks. It's confusing. Different provinces word it differently. Some provinces don't kick in until after you've worked for 3 months. So if you've worked for 3 months or more, up to a year, you get 1 week. If you work for 13 more, 1 year plus a day, 2 weeks. 2 years plus a day, 3 weeks. So you're in your second year, 2 weeks. You're in your third year, 3 weeks. Different provinces use different lingo for this. To calculate the amount of termination pay for an assignment employee, in the case of termination resulting from a layoff, then there's an average over a 12-week period. We tend to not treat temporary workers in layoff. We tend to terminate them or not terminate them, but you can have a layoff, in which case it's considered a layoff if you intend to recall them. And then if you don't recall them at the end of a 12-week period, then that triggers a termination, and you'd have to pay them as if you had terminated them. So you can say, this is not a termination, it's a layoff because I really think you're going to come back. But if 12 weeks go by and you haven't called them back at all, that triggers a termination, and you got to pay them as if you terminated them in the first place. It just delays the time for which you have to pay that person out. There's rules about how you count weeks. There's rules about whether or not the person has to make themselves available. So if they refuse to come, if you make them an offer to come back and they say, no, I'm not available to come back, then they become no longer eligible. So there's some rules about temporary layoff. Again, it's almost unheard of that we in the temporary help business lay people off and call them back, but theoretically, theoretically, it could go like this. You could have a worker who worked for you for a long time, 2, 3, 4, 5 years. So they're entitled to 2, 3, 4, 5 years worth of notice. Your customer calls you up on Friday and says, ooh, sorry, but we have to end that assignment today. Something big happened, some reason. Your contract doesn't require us to give you any notice. It doesn't require to give you any pay. Sorry, goodbye. So now you've had this employee who's now entitled to 2, 3, 4, 5 weeks worth of notice or pay in lieu of notice, but you think you can get them another assignment. So you temporarily lay them off. The lingo can get confusing. Remember, I said continuity of employment. When an assignment ends, it doesn't mean their employment has ended. So you call the person, you say, I'm really sorry, your assignment has ended. I'm going to try to get you something. I don't know how long it's going to take. So at this point in time, they are now technically in layoff. If at the end of 25 weeks, 12 weeks, you have not called them back at all, and there's this other thing called the 35-week period. If you had 12 weeks out of a 35-week period where they didn't get called back, in other words, you called them back for a little bit, then they went, and they called back a little bit, they went. Eventually, that can add up to a termination. But let's just go with the simple one. 12 weeks, you haven't called them back. Now that triggers a termination. So theoretically, at that point in time, you would owe the person 3, 4, 5 weeks worth of pay in lieu of the notice that they didn't get. So all these other things start to kick in. You start to phone them up. You say, hey, can you go to work tomorrow? And they say, no, I'm sorry, not available. Oh, that week didn't count. Oh, that week didn't count. Until eventually you can say, hey, this person is no longer eligible for termination pay because they took a job somewhere else. We put them into layoff, but they went and took a job somewhere else, and they weren't available to be called back anyway. So a lot of when this legislation kicked in, a lot of agencies, temporary staffing services, were looking for ways to document the ends of their assignment and the ends of their employment so they didn't get trapped into these unwitting layoffs that turn into termination of employments, which turns into unwitting notices because customers didn't give you any notice at the end of their assignments. We've all kind of worked around that. We've worked around it in a couple ways. One is we ask our customers for notice. Two is we tell people the end date of their assignments. So we're always giving them notice. We if we don't think it's the kind of person that we can employ again, we give them notice of termination with the end of their assignment notification. And also, as it turns out, most people who are working in the temporary staffing world don't remain unemployed for 3 months, never get another job, then call you back 3 or 4 months later and say, hey, by the way, that layoff is now triggered. So it hasn't turned into be this massive unwitting cost, but technically it could. Technically it could. So we always give people end dates on their assignment. We always, if we don't think we're going to employ them again, we issue records of employment and we terminate their employment and we let them know that they're terminated. We make every effort that we possibly can to stay in contact with the people whose assignments ended and document our contacts with those people so that if in fact they were not available or we're making them offers and they rejected them, they wouldn't qualify for these unwitting termination pays. And at the end of the day, our best practices tend to work out okay. Some more examples, just different lingo. Less than 1 year in Ontario, 1 week notice. Now, here's an interesting thing. From 1 year or more, so in their second year, but less than the beginning of their third year, so that's in your second year, is 2 weeks. So that's the language that they use there. Whereas in British Columbia, it's exactly the same thing. They just say it's not exactly the same thing. They say after 3 months, 1; after 12 months, 2; after three or more, 3; 4 or more, 4. So it sort of breaks around here and gets a little different. So it's after 1 year, it's 2, but then it's after 3 years, it's 3. So it remains 2 in that for more than a 1 year period in here. So it's all very, very similar. Again, you're not required to memorize every province because the wording is slightly different. The rules can be slightly different, and the interpretations of the rules can be slightly different. It's important for you to know that there are things as notice periods. Notice periods are tied to years of employment. Typically, there's 8, although in Manitoba it's up to 10, but typically it's a maximum of 8, and typically it's 1 year, 1 week of notice per year, and that you must give notice or pay in lieu of notice or some combination of pay and notice in order to meet your obligations. Now, in Ontario, in common law, so not in the legislation, we use the term severance colloquially or in just kind of common discussion. Oh, yeah, I got my severance pay. Well, in Ontario, the term severance pay has very specific meaning. It doesn't mean termination pay. So if you're suing an employer or an employee is suing your company for unlawful termination of employment, which means that you didn't follow the contract, you offered me certain kind of notice periods and pay things in my contract, and then you fired me and you didn't give me that. That's what we call unlawful termination. Then very often they say, yeah, my severance pay was pretty good or pretty bad or whatever. That doesn't mean the same as the term severance pay in the Employment Standards Act. The Employment Standards Act, it specifically means extra compensation that is added to termination pay. So we, on the previous screens, we talked about termination pay 1 week per year. It's extra compensation that's added to termination pay for long-term employees that lose their job. It's not the same as termination pay. It's above and beyond that. And it cannot be offered in notice or in working time. It is money, and it's only money. And a person qualifies for this extra money if they have worked for 5 years or longer with that employer, and it has to be continuous employment. It can be with breaks, with continuity of employment. It can be like a month off here and a month off, 5 years, as long as you weren't terminated officially somewhere. 5 years of continuous employment. And the employer has a payroll of $2.5 million a year. So that's pretty much every temporary staffing company. If you've got less than $2.5 million, you're really small. So $2.5 million in payroll, or 50 or more people got laid off at the same time. So it's pretty hard to have 50 or more people laid off and not have a $2.5 million payroll, but they cover it both ways. So you got to be a reasonably large size company. You have to have 50 or more people laid off or $2.5 million payroll. The person has to have worked for you in continuous employment for 5 years or longer. And then if you give them their 5 weeks or 6 or 7 or 8 weeks notice, You are also required to give them 1 additional week per year, up to 8 weeks in pay. So that doesn't happen a lot with temporary workers because really, how many temporary workers work for you for 5 years and then leave unexpectedly without notice and without pay? Usually they quit, find another job, they're going somewhere else, or they don't work for 5 years. So it doesn't kick in very often. It's rare, but it can happen. It's more of interest for you for, say, for example, your consultants and your managers in terms of their obligations for termination in case you're downsizing or letting somebody go. And also, usually, employment agreements have got this stuff spelled out. So it's usually at least this. And also, let's think about this. Say an employee works for you for 10 years. Under this, they would be qualified for 4 weeks of termination pay and 4 weeks of severance pay. That's 8 weeks for 10 years. Well, we know in common law that it could be up to 10 months of pay for a person who worked for you for 10 years. So in common law, if an employer gets sued, the lawyer's going to say, yeah, you could qualify for up to 1 month of pay per year. So 2 weeks of pay would have been the minimum required by law anyways. 1 week of termination pay, 1 week of severance pay for up to 8 weeks. And so what the lawyers are really negotiating is another week or 2 weeks. Sorry, I apologize, I said months. Another week or 2 weeks per year, so that now you get up to a month per year for the termination. So in common law, the lawyers get involved and there's an employment contract and an unlawful dismissal. We talk about 2 weeks to a month per year. And in statute law, particularly in Ontario, for a person over 5 years, you pretty much start off at 2 weeks and it goes up from there. So hopefully I've confused the heck out of you on that one. And at the end of the day, probably everybody's going to use the term severance pay anyways in the wrong context, and the world will still go on. We know that in Employment Standards Act, there are lots of different kinds of leaves. I mentioned them earlier. There's parental leave and personal emergency leaves and family medical leaves and family caregiver leaves. And I don't really always know the difference. We'd have to look it up because I've looked it up 4 or 5 times. I'd have to look it up again to know the difference between family medical leave and family caregiver leave. But they are 2 separate things with 2 different definitions. Critical child care. So you got really sick children. There's longer periods. You can have up to a year off for donating an organ. You can be a reservist and called up to the reserve because there's a war or a flood. You could be called up for that and you're allowed to have time off. And then we've talked about crime-related child death or disappearance. I talked about that earlier, up to a year. There's pregnancy loss leaves now. So a person who was pregnant and didn't get to full term and lost their pregnancy can get up to 12 weeks off. Family medical leave, 27 weeks. Child death, 2 years off. Disappearance, 2 years. I said earlier 1 year, 2 years. There's domestic sexual violence legislation. It says new, it's not that new anymore. That came in Ontario in Bill 148, I don't know how many years ago, 13 weeks off. Personal emergency leave, up to 10 days off. So look, there's lots of different definitions for which a person is entitled to take off time. And also, they've removed some of the requirements for people to provide medical doctor's letters for some of these things. In other words, proof. And this does not mean pay. This does not mean long-term disability. This is just time that a person is allowed to take off for these various reasons and entitled to return to work at the end of that period without loss of seniority and to receive a reasonably similar job to the one that they left, not necessarily exactly the job that they left from. Not going to go into a lot of details about the COVID stuff, but you know that it happens, so you know things can happen. In 2021, the Ontario government kind of put a bunch of these rules in abeyance. They said, okay, they don't apply because everybody's going to get laid off and everybody's going to go away, and we're going to extend the layoff periods and the return to work periods, and companies aren't going to be required to give notice of termination, and they're not going to be required to call them back. And if we don't call them back by a particular date, then all of those rules didn't apply. And then they came up with a period for the end of that, which happened to be July 30th, 2022. So they said, okay, if you didn't call them back by July 30th, 2022, now all these notice periods are going to start to kick in and go ahead. And so beginning July 31st, 2022, employers were no longer deemed to be unpaid infectious disease leave. And the rules around constructive dismissal would resume. So in other words, people could say, hey, you didn't treat me fairly. I'm supposed to get called back, but I quit because you guys are jerks. And they went and found another job. You can still sue them because constructive dismissal means that the employer didn't uphold their part of the deal. And they said, we didn't uphold our part of the deal. We didn't uphold our part of the deal, but take it or leave it. And if you leave it, you quit. And the law says no. If the employer doesn't uphold their part of the deal, then the employee can allege that they got fired. It's tantamount to the equivalent of being fired. So when you hear people say, I sued my employer for constructive dismissal, it means they didn't fire me, but they basically changed my employment terms to such a significant degree that for all intents and purposes, they did fire me. And so when I walked out the door, I walked out the door as if I was fired, and now I'm exercising all my rights as a fired employee instead of a quit employee, if that makes any sense. New laws in Ontario and in some other provinces with respect to disconnecting from work. Employers with 25 or more employees on January 1st of any year. So in other words, it doesn't kick in the middle of the year. An employer has to say at the beginning of the year, do I have 25 or more employees? And if I do, I have to have a written policy for this coming year on disconnecting from work. And it has to come into, you have to give people 3 months notice, and it has to come into a policy by March the 1st of that year. And then once it kicks in, it stays in from that point on, unless an employee significantly and permanently goes under 25 employees, they could make the case that they're taking that policy away. But disconnecting from work is defined for 25 companies with 25 or more employees in the Employment Standards Act that establishes that their people are allowed to turn off their phones, not answer their emails, turn off their GPS on their truck or their car. Hey, look, we've got this in our home care business, we've got what's called GPS fencing and GPS tracking. We know when a person goes to our customer, when they clock in, their GPS says, yep, they're in the house. They're at that person's house. And if they leave the person's house, it says, hey, they left that person's house. Now, we can't track them when they're off schedule, but we can track them when they're on schedule, just like a trucking company can track with GPS where their trucks are at any point in time. during the day. But this is intended to say you can't have the cameras on, you can't expect them to answer their email, you can't expect them to answer their text messages, you can't expect them to answer their social media stuff or their emails or anything at all when they're disconnected, when they're off of work. So employers with 25 or more employees have to have a written policy for this electronic monitoring. It has to include all forms of employee and assignment employees. So the example I gave you with respect to our caregivers, who we monitor electronically when they're at work, GPS tracking delivery vehicles, tracking websites, tracking their activity on their computer. So theoretically, a person who takes their company computer home, you're not supposed to be tracking that they're on their computer doing stuff. Although you can make a policy that says you're not allowed to use company computers for non-work related stuff. So if you're going to go home and you're disconnecting from work, use your personal computer, don't use your company computer. You can do that. It does not create a right for employees to not be electronically monitored. You can during work hours, nor does it establish any new privacy rights. This doesn't say that it takes away a company's right to have the camera on in the loading docks or in the elevators or whatever. Those doesn't give additional rights, but it requires the employers to be transparent as to whether they are electronically monitoring their employees. And if employees do electronically monitor employees, the written policy must describe how the monitoring occurs and what situations it occurs and explain the purpose for which it is. And it also, so this is the Electronic Monitoring Act, and it goes together with the the right to disconnect, so that when a person is off duty, they can say, hey, I don't want you monitoring me, and I don't have to answer the phone during those time periods. Now, this was all designed because people are working from home and they've got weird hours, and then some employers are going like, hey, if I'm not going to require you to come into work, I expect you to answer the phone at 6 o'clock in the morning or in the middle of the night or whatever. And so we've got new legislation that says we have to tell you if we're monitoring you, and when you're not at work, you don't have to reply. So those are two parts of that legislation: right to disconnect and employee monitoring legislation. And also, in that same legislation in 2021 that was passed, it removed the non-competition, the prohibition for non-competition in employment agreements. So we used to say, if the employee quits, dies, gets fired, or retires, they're not allowed to work for a competitor within a year or 6 months, within the geographical region of wherever they used to work. And non-competition agreements were kind of like a catch. Now this is getting a little legal, but we're kind of like a catch-all, because it is legal and always was legal to protect confidential information. We were always allowed to have these things called non-solicitation clauses. So we could say to a worker, hey, if you cease to work for us in the future for the first period of time, forever, you can't use our confidential information. So if we've got proprietary information or patents and copyrights and company plans and names and telephone numbers of customers, this is all confidential that you would not have access to, and you wouldn't even know had we not paid you to work for us. And when we paid you to work for us, we paid you to take care of that information, to care for it. That was part of your job. And so when you leave, you can't take it and use it to cause harm to us. This is the purpose of confidential information. And so we even go to the point where there's these things called fiduciary duty clauses, where a fiduciary is a person who has got, is a fiduciary, the definition is a person with a responsibility, a higher responsibility to have, hold, and protect So if you hired a caregiver for your child, they would have a fiduciary duty to act in the best interest of the child to keep them safe and fed and warm, and they'd have this responsibility to look, they're the caregiver to care for the person. Um, and so when you're given a fiduciary duty, it even increases the importance that when you leave, you don't take advantage of what you were given access to. So, in other words, the caregiver can't say, I had a fiduciary duty to look after the kids, and when I left, I took them to be my own. That would be, you're put in a position to act like a mom, and so therefore, when you leave, you steal the kids and become their mom. That's really bad. So let's now take that and tone it down a little bit and say you've got a duty to protect customers and to act in the best interest of customers and to nurture the relationship on our behalf of our company with customers. And so when you've got a fiduciary duty to protect the confidentiality of that information about the customer, and you've got a fiduciary duty to protect the relationship with the customer, so when you leave, you can't take that with you. This stuff is okay in law. It's allowed in law. So much so that they also say you're not allowed to use it to solicit to sell to those customers, because that will give an unfair advantage to you. We paid you to have our information. Now you're using it for your own benefit at our harm. So that's a non-solicitation clause. That's allowed. You're not allowed to come and recruit your coworkers away from our company. That's the solicitation of workers. That's allowed. You can stop a person. It's allowed to stop a person from doing that. And so then employers over the years said, boy, that's a lot of words. That's a lot of definitions. Fiduciary duty, got to define it. Confidential information, got to define what's confidential and what's not. Got to define the person's fiduciary responsibilities. Have to define solicitation. What does it mean to be so they end up writing these really big, complicated employment agreements that say basically when you leave, don't do anything to hurt me. And so they came up with this broad stroke of a brush called a non-competition clause that said, well, we can handle that by just saying, look, let's just stop the person from competing against us, working for a competitor, starting a competitive company, going to work for the competition or something. So we came up with, said, well, if they don't work in my industry for a year, then that basically covers non-solicitation, not confidential information, fiduciary duty. It covers all that stuff. So let's just stop them from working in the industry for a year, non-competition. But non-competition can also be overzealous, because a person might want to go work in the industry and have no intentions whatsoever of using your confidential information, being soliciting your customers, or breaching their duty as a fiduciary. They just want to go work for another company, and they're going to do a job for the other company and not hurt you at all. And so the government came along and said, boy, these non-competition agreements have become a little overstated. And particularly when it comes to temporary workers, my goodness, you send a temporary worker out on assignment, and then you say you can't go work for another temporary help company. You can't be employed by another temporary help company because that's competition. So the government prohibited in 2021 the use of non-compete clauses in employment agreements. So if you have them in there, they're not enforceable. And if you have them in your temporary workers contracts, they're totally not enforceable. Because they didn't even have a fiduciary, or probably didn't have access to your confidential information. So that was another little bit of a change. Another one of the changes that came along in 2024, or 2023, then it was delayed to July 21st, 2024, was the introduction of employment agencies licensing in the province of Ontario. Now, from sometime in the 1960s until 70s, I'm not sure, long time ago, there was employment agency licensing in Canada and or in Ontario, and in many other provinces too, and it continued to exist in other provinces. But in Ontario in 2010, mostly at the behest of ACSESS, we had employment agency licensing. This was for permanent recruiters, repealed and taken away in Ontario, because between the 1970s and 2010, while there were thousands of employment agencies that were paying $500 a year for a license, there was never one documented case of a company having their license revoked for unscrupulous or illegal behavior. So here what was happening was the Ontario government was issuing licenses to companies saying, this is a legit company. Let's give them a license to hang on their wall. I called it the tin badge. It was the fake sheriff's badge that said, I'm a good guy. You put it, you paid your $500. You told all your candidates and all of your customers, I've got a license. I've met some high standard. And yet, there was no standard. Nobody ever got fined or lost their license or even got inspected for something. And so we said, what's the point? Why are we paying $500 a year for nothing? As a matter of fact, we'd rather have ACSESS say, look, join and become a member of ACSESS. These people have got a code of ethics and standards, and they've got their CPC, and they do professional things. And if you're not a member of ACSESS, it might imply that you're not a good guy. Doesn't mean you're not a good guy, but it might imply you're not a good guy. So the licensing was taken away. Well, between 2010 and 2023, advocacy groups came to the table and said, there's a bunch of temporary help companies out there that are treating people badly. They're not paying wages to people. They're paying them cash under the table. They're sending them to unsafe workplaces. They're not paying them their overtime pay. They're not paying them their public holiday pay. Our argument was, we already have laws for this. Let's just go catch these guys and use the laws that exist. I'm teaching you the laws today about what employment standards and so on existed. But they said, no, let's make special rules for temporary help companies. So they came up with a lot of special rules, and then eventually said, we're going to make them get a license. And then they extended that to, whereas it used to be only permanent recruiters, now it was temporary help agencies. Then they extended it to recruiters, and they required temporary help agencies to get a license. And then if they were recruiters, to get a second license or a second part of the license to apply kind of separately for it. And an employment recruiter could get a license without a temporary help part. Temporary help could get one without a perm part. But licensing became a thing. There are some couple thousand, I don't know the number right now. I think it's 2,500 or 3,000 companies that have applied for those licenses. They did come into effect July 1st, 2024. They still have not notified a bunch of those companies that they've been issued their license as of today. They have not put into place a regimen to measure and evaluate and audit and penalize companies. So, and then of course, we had an election in there, which put everything on hold and stopped. And so we're kind of back at the stage again where we're trying to get employment, the Ministry of Labor, to figure out how you're going to make this a real badge of honor, not a tin badge of fake legitimacy. And your board of directors from ACSESS has decided that this is probably a good thing, that if we can get the government up to speed to do this, then we can use this process to continue to keep unscrupulous operators and fly-by-night companies and people who are trying to take advantage of foreign workers and new immigrants and young workers and exploitable people. And we can use this licensing to try to keep those companies at bay. One of the new things that they've done in Ontario with this licensing is they've also said that the fines that will be issued will also be issued to the customer. So it is behooves the customer, it is the responsibility of the customer to make sure that when they're dealing with a recruiter or an employment agency, that they also have a license. Otherwise, the same penalties that will be imposed upon the company will be imposed upon the customer. So they're basically saying, make sure you're dealing with legit organizations. In Manitoba, 2018, same reasons. They took away the licensing. For temporary help agencies. In British Columbia, they require an employment agency license, but not for temporary help companies. In Alberta, they require an employment agencies, but not for temporary help agencies. Quebec requires an employment agency license for permanent placement, search, and recruitment firms, and for people who hire temporary foreign workers, but not for temporary help agencies that employ domestic workers. And there are no agency requirements in the Atlantic provinces. So you can see that the jury's out whether or not employment agency licensing is a good thing. And in Ontario, they seem, because they've got bonding requirements. So in other words, you have to have a type of insurance or money in the bank, $25,000, because they think that the biggest issue there is that workers don't get paid. So with employment agencies, notwithstanding foreign recruitment agencies that are required licensing, and there's special rules around that, that they think that the biggest problem with agencies and temporary help work companies in Ontario is that these companies don't pay minimum wage, or they don't pay public holiday pay, or they don't pay vacation pay, or they don't pay termination pay, or they don't pay overtime pay, or they just don't pay. And so in order to be an operator, you have to have a $25,000 bond or irrevocable line of credit, which would allow the ministry, if they found a company to be at fault, that they could call the bond, use the insurance, or use the irrevocable line of credit, go to the bank, say, give us the 25,000 so we can pay these workers the money that they're owed. So they seem to think it's the temporary workers agencies are the ones that need to be most licensed. The permanent placement agencies need to have a license, but don't need to have the $25,000 bond or irrevocable line of credit. A reprisal. You'll hear the term reprisal. A reprisal is when a company penalizes in some way a worker who calls upon their employer to uphold their rights. So they could say, hey, I was entitled to have the public holiday off, but you didn't give it to me off. And then the company goes, hey, you complain about that, you're going to lose your job. You know what complaining gets people around here? Well, that's called a reprisal in the law. And employers who reprise against their employees who have got a claim, whether it's a legitimate claim or not. In other words, if a person thinks they have a right, they have the right to inquire, and they have a right to ask the ministry to answer their questions and tell them what their rights really are. And the employer cannot punish the worker by intimidating them or terminating them or shortening their assignments or giving them less assignments or putting them down on the seniority list as a result of a punishment for complaining. This question is a trick question. The answer is 5 years in the Employment Standards Act, but Revenue Canada has got, the Employment Standards Act has got some areas for 3 years, but Revenue Canada, which is what we're not talking about here now, has got a requirement for 5 years. So I always recommend to people, keep all of your records about all of your employees for 5 years or longer. So you need to keep records of when they took vacation, how much vacation pay they earned, how much they earned, what overtime they earned, what documents they submitted, what leaves they took, parental leaves. If you've got any written agreements, timesheets, and invoices, keep records of this for 5 years. It's confusing. Some of the things are 3, some of the things are 5. So why would you purge some of your documents at one point in time and others at another point in time? Keep them for 5 years and be safe. Record keeping example for the province of Manitoba. The types of things that must be kept are things like dates of birth and occupations and names and addresses and dates that you started work and finished work and all of your hours of work and overtime work um, when wages were paid, paycheck dates, um, reasons for deductions. So your CPP, anything that might come tax, all of that stuff has to be kept for 5 years. Overtime that was banked, when it was used, after it was banked. I mean, listen, copies of maternity leave stuff, dates of termination, termination letters, work schedules, timesheets. Manitoba goes to great extent, like many of the other provinces, to define all of the records that must be kept. And my question to a lot of clients that I do consulting for in the staffing industry is, are you keeping these records at all? Do you document this stuff at all? Does your system make you keep track of this? Because I would say that some companies fault for getting rid of it too soon. And in the old days, it was easier to get rid of it too soon because we had bankers' boxes full of paper. Um, Now it's easier with electronic records. But if you upgrade your system, if you move from one system to another, um, what do you do? How do you keep those records? Keep them 5 years or longer. Ontario temporary help agencies, there's new rules around Ontario. They're not that new anymore. They're now over 10 years old. But on the Employment Standards Act of Ontario defines a temporary employee. It defines their right to public holidays. It defines their right to notice of termination. It defines their right to notice of severance pay. It specifically says that they have right to equal pay and equal work. In other words, it says we can't charge them a fee. Oh, here's an interesting thing. We can't punish people for things, but it also went on and got expanded under Bill 148 to say that we have a joint and several liability with our customers. So the what does that mean? So that means that, sorry, I should go back again. It means that, for example, say a temporary agency goes out of business and they haven't paid some of their workers. It can hold our customers responsible to pay those workers, even if the customer paid the agency. So when you have got a joint and several responsibility under the Employment Standards Act, it specifically says there's a unique thing that's going on here with temporary help services, temporary help agencies. They're the employer, but they're actually working for and at and through the direct supervision of this customer. And so you can't have this company, the temporary help company, just set up, send the people over there, then it disappears and think the company's going to be off the hook. So it extended this joint and several responsibility onto the client and made them responsible also for unpaid wages. There's issues with respect to foreign nationals and overtime pay. That's under Bill 114 or under Bill 18 in 2014. It in this bill, it also talked about co-op students, that co-op students, even if you're not paying them, that they're entitled to all of the safety laws that exist. It talked about lost wages for people. So this joint and several responsibility extended also to not only to the customers, but to different kinds of workers. Now, here's an interesting one that happened 2 years ago. Through a lot of lobbying through our association and through IT consultants, effective 2023, the Employment Standards Act no longer applies to individuals who are business consultants or information technology consultants. In other words, what they said you remember at the beginning of this, I said something confusing. I said the Employment Standards Act applies to temporary help companies, not to customers, when the person comes from the temporary help company. They will be the employee of the temporary help company, not the customer. They'll never be the employee of the customer. And they'll default to be the employee of the temporary help company unless they can prove that they're an independent contractor. Well, now they're saying you don't have to work too hard to prove that they're an independent contractor if they're a business consultant or an IT consultant. So, in other words, if you're sending secretaries and administrative assistants and call center representatives and laborers, they're going to be employees, and it's going to be pretty hard to prove that they have an independent business as an independent consultant. But there's been so many cases of business consultants and IT contractors that are set up. This is pretty easy for us. That group of people won't default to become an employee. So if they are giving advice for operations, profitability, management, business structures, processes, accounting, procurement, strategy, then they can say, yeah, I'm an independent contractor, I'm not an employee, and the Employment Standards Act does not apply. So the Employment Standards Act says customer is not the employer, temporary help company is. But sometimes nobody is the employer because business consultants and IT professionals can be independent contractors who are nobody's employee. So they're not the customer's employee, never are. Almost always are the temporary staffing company's employees, except for when they're a business. And these kinds of people, business consultants and IT professionals, are more likely to be businesses. So, managing your ESA keeps your costs under control. It removes the possibility that you're going to get sued. It removes the likelihood that you're going to get in trouble with your customer because you didn't know the law and you dragged them in with you. It removes the likelihood that you're going to have uncomfortable audits inside your business. It shows that you have care and consideration for your workers. So complying with the Employment Standards Act generally has a whole bunch of business benefits that go beyond the obvious, which some people talk about removing red tape and the disruptiveness of government. The Employment Standards Act is one of those things that kind of says this is in everybody's best interest. There are some posters that you can download from the Ministry of Labor that you can post in your office. And so all you need to do is go online and go to the Ministry of Labor, to the Employment Standards Act, and look for the posters. There are specific brochures and information sheets that also deal specifically with the special rules about temporary help agencies and assignment employees. And we talked a lot about this, so I can zoom right through it in the minute that we have left. It is co-employment. It is where there is this tripartite relationship where there's a staffing company, the customer, and the employer. And the changes in the legislation have made it really so that the staffing company is the primary customer. The Bill 18 that we talked about talks about joint and several responsibilities. So in some cases, the customer won't get off the hook in having irreputable staffing companies act on their behalf. So make sure they're reputable, otherwise you might be caught up in the loop. But basically this tripartite co-employment relationship can come into play in workplace health and safety. So in other words, the staffing company's got a responsibility to make sure that the workplace is safe, but it's the customer's workplace, so they've got a responsibility to make sure it's safe. The staffing company's got a responsibility to uphold the Employment Standards Act and to pay their workers, and the customer has got a joint and several responsibility to ensure that the staffing company is paying their workers. And when it comes to unions, it is possible that the staffing company's employees can look to be integrated and the same or similar to the group of the customer's employees. So if you've got 400 customer employees and 20 temporary employees, but they all do the same job, work in the same place, do the same thing, then under co-employment relationship rules, you can say those are employees for the purposes of joining the union or signing the card or voting in the union. So we talked about this, we have this three-part relationship. Again, I've just really kind of all explained it to you, the staffing agency, the customer, and the temporary employee. We talk a lot about things like who's got responsibility for what. The answer to this really is this: put it in your agreement with your customer. They're responsible for the onboarding of this, and you're responsibility for that. You'll cover WMIS core training, they'll cover site specific training. You'll cover how to get paid, they'll cover how to, get your timesheet signed or something like that. So, put it in your agreement and everything will be fine. But balancing that relationship with your customers will mitigate your risk by putting it clearly upfront in writing. Schedule time with your customers and your employees to go over who does what and who has responsibility for what. Um, you can't be responsible for everything that happens at your customer site. So you have to make every effort for you to possibly decide who's going to do performance reviews, who's going to provide coaching and counseling, who's going to handle problems, um, the changing jobs, moving around, changing hours, paying your workers, communicating to your workers. All of these things are things that both you and your customers can try to figure out. Stand in your customer's shoes and figure out what do they expect of you. If you think that they might be expecting something that you don't do, have that communication with them and get it in writing. Stand in your shoes and think about what you expect of them. If you think that that's not really obvious and clear to them, get it in your service agreement with them. The best way to mitigate your risk is to have it in your employment contracts and to have regular conversations with your customer. Your customers might ask for proof of your insurance, and they might be asked to add as a additionally named insured on your insurance. They might want to see your annual reports. They want to look for customer references. They want executive summaries or summaries of your staffing firm executives or your financials. These are all things that you can do with your customers to enhance your relationship so that they understand that you are a legitimate player and a legitimate supplier that is sharing in responsibility to treat your workers under the law lawfully with dignity and respect. So we talked about co-employment joint responsibility. You don't have to do that. It used to be unclear, less clear. It was through common law decisions that many of these things were made, and then they were escalated in statute to become part of written law. I talked to you already about elect to work employees, where a worker has the right to elect to work or not to work when requested to do so. It is not a thing anymore. It is not a phrase. If you ever hear that phrase or you hear somebody say it, it's usually somebody trying to get their butt out of a responsibility under the law that they probably have a responsibility for, because there are not very many things that temporary help companies, staffing firms are exempt. I can't think of any are exempt from doing that other employers are responsible for, whereas that did exist under the elect to work provision. So we don't need to talk about that anymore. It is against the law in Ontario now to charge fees to a customer after a temporary worker has been on assignment for 6 months. It doesn't matter if they've been there for 1 day a week for 6 months, or 5 days a week for 6 months, or once a month for 6 months. The law just talks about the first day of the assignment, and if they're there for 6 months, then you cannot charge a fee to your customer. So these try to buy and conversion fees and buyouts of contracts, they all only exist in the first 6 months, except for, of course, if they're not an employee. If they're an independent contractor like a manager providing consultant or an IT professional who operates their own business and they're exempt from the Employment Standards Act, then those fee terms that you have don't expire at 6 months. They can continue on for a longer period of time in your agreements with your customer. There's lots of links that you can get at that are in the back of your presentation page, but I got to be honest with you, we don't keep them up to date because they change and they change and they change and they change in these presentations. But I do recommend to you to use the internet to look things up. You now know the topics that are covered under these areas, but know this, that just because I told you this today, every time a province changes a government, every time that they are influenced as an election coming up, every time there are advocacy groups or they see recurring problems, they have the right to change the rules and write new legislation and statute. So you know what the topics are from attending this thing today. Don't assume that you always know the answers. I've been at this for 43 years and been teaching this course and consulting companies around this stuff. And I never assume that what I thought I knew yesterday on these topics, I know tomorrow or today. I always double check because they change. That's the end of our presentation for today. We are 7 minutes overdue. I apologize for that. Tomorrow we're going to be quicker because some of the stuff we did at the beginning about access and licensing and blah, blah, none of that's going to be covered. That's covered at the beginning of every session. So we're going to move through that real quickly and knock 20 minutes off or 15 minutes off the beginning. Before we go though, any questions from anyone at all? Don't be ashamed. Doesn't even have to be, it can be closely related to these topics. It doesn't need to be specific to anything I talked about today. Well, there we have it. I figure usually if there's no questions at the end, I've put you all to sleep and you didn't even notice that I asked, or did such a fantastic job. You understood everything. You have no need to ask me any questions about it. I'm going with option number 2. I'm going to see everybody again tomorrow, and we're going to jump into other aspects of human rights and other employment areas that I think everybody needs to know in order to be a great recruiter. We'll see you all tomorrow. Take care.
Thanks,
Thanks.
Steve.
Thanks, guys. Bye.
Thanks, Steve. Have a good night.
Oh, thank you. Good night.
Yeah.
Thanks,
Bye.
Steve. Bye-bye now.
Bye-bye.